Intel's stock price is up almost 12% in the last 5 days, as the company has been one of the beneficiaries of the results of the United States election, with incoming President Donald Trump indicating he will take a more aggressive approach on importing products or outsourcing manufacturing outside of the United States, as Intel is one of the last remaining U.S. semiconductor manufacturing companies at scale. And so a lot of investors are now getting more interested in Intel stock now that the results of the election have been determined, and U.S. manufacturers are likely to receive even more favorable treatment under the incoming administration, even though even the previous administration had invested several billions of dollars in U.S. manufacturers. So all that being said, let's take a closer look inside Intel, the latest developments at the company, and understand what's going on with Intel stock. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in the most recently completed quarter, Intel CEO Pat Gelsinger said that they delivered third quarter revenue above the midpoint of their guidance, and we made significant progress on our cost reduction plan. And that's an understatement. The company has undertaken a massive several billion dollar cost reduction plan to bring the company's business, right-sizing it along with current demand. And the underlying trends in the business are improving at a measured pace, and our outlook for Q4 is modestly above our current consensus. And I've had Intel stock rated as a buy all year in 2024. It's been one of the more disappointing recommendations I've made, although the results of the last week are encouraging, and I've talked about how this business is going to take a long time to turn around. According to management, 2025 still is not going to bring that boost that many investors are hoping, and the company is signaling that 2026 is when we're first going to start seeing the boost from all of these investments the company has made in the previous several years. So management saying that they completed the vast majority of their headcount reductions during the third quarter, and they're on track to generate a 15% workforce reduction before the end of the year. Additionally, they reduced their capital expenditures by over 20% relative to the plan they had entering the year. And they have invested significantly in capital expenditures to catch up. They had been underinvesting since 2010, all the way probably until 2018, 2019. And they finally decided that, we're falling behind too much. And given the incentives the U.S. government is providing, it's an opportune time for us to ramp up our CapEx to catch up to the leading edge technology. And now they're transitioning to the EUV, which is the latest generation technology from ASML. They say that it's now complete and the launch of Intel 18A is on the horizon. They have a more normal cadence of development at Intel 14A and beyond. So these last few years, they really ramped up investments in capital expenditure to catch up. But now that they're caught up, they feel like they can return to a more normalized investing plan over the next several years, not as aggressive as they had been in previous years. So the CEO saying that they plan to reduce non-product cost of sales by $1 billion in 2025, lower operating expenses to $17.5 billion, and drive gross and net CapEx to between $20 to $23 billion and $13 billion at the midpoint, respectively. They expect positive adjusted free cash flow next year, and they will focus on decreasing leverage, which means paying down debt and improving liquidity. All of these actions will have a huge benefit for Intel stock investors, as the company's cash balance has decreased significantly. Paying down debt will have the further benefit of reducing interest expense, which will increase profitability, which will leave the company more cash on the bottom line, which it can use to pay down more debt and have that positive virtuous cycle play out over the next several years. So long as the company continues delivering positive free cash flow, they can continue utilizing that free cash flow to pay down a lot of their debt, which has gotten bloated in recent years, to capitalize on government incentives to invest in expanding manufacturing in the United States. One of the areas the company is bullish about is their technology for artificial intelligence on the personal computer. They are setting a new standard for mobile AI performance and outperforming competitor platforms. Their next generation technology has a combination of superior performance and better battery life, and they are excited about their lead in the AI PC category, which is coming out to a slow start. I thought PC sales would be a lot better in the second half of 2024. That's been slower than expected, but I think that will lead to better than expected performance in 2025. There's a big replacement cycle upcoming for personal computers, and it might be in 2025 in the first half, it might be in the second half of 2025. If it's delayed longer, it might be in 2026, but there's a pending wave of millions of PCs that were purchased in 2020 and 2021 that are going to need to be upgraded. And then Windows is ending support of Windows 10, which is going to require those PCs to be either upgraded or changed to newer PCs. And so that's going to drive growth in the industry, a huge replacement cycle. Intel remains on track to ship more than 100 AI PCs by the end of 2025, which if you decompose that forecast, they earlier said that they're going to sell 40 million AI PCs in 2024. So that means a 50% increase for 2025 to 60 million AI PCs sold. That would be a great result, 50% year-over-year growth. And then expect 2026 to be even better than that as consumers start to adopt these next generation PCs. And then the launch of Panther Lake in the second half of 2025 will be the first client CPU on Intel's 18A technology, which is a more performant and cost-competitive process that will allow them to bring more wafers home and improve overall profitability. Remember, Intel, even though they have their own manufacturing facilities, they still outsource a significant amount of manufacturing to Taiwan Semiconductor. And what Intel management is saying is, given their investments in their own manufacturing, starting the second half of 2025, they're going to be able to bring back some of that outsourced manufacturing in-house, and that's going to boost profitability overall. So a lot to look forward to with Intel. It is slow going, but there's a lot to look forward to. And given the geopolitical concerns working in its favor now, Intel stock investors can be cautiously optimistic looking ahead. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.